Okay, welcome back. Let's talk about the renewable space, right? And we have a bunch of listed companies now, which allow you to give which give you a play on renewables directly, solar especially. I have the management of Premier Energies with us now to talk to us about the numbers which they reported for the quarter. Vinay Rustagi is Chief Business Officer at the company. Vinay, great to have you with us here on the program as always. Good morning. Uh, and and you know. I would like to talk about competition, which I think is the big bugbear, which investors are worried about, which we will get to in just a bit. But let's just address the numbers for a quick bit. So order book in the quarter, as I see right now, is kind of flattish, right? But you look at margins. Margins have come off. They were about 33% in the fourth quarter. They're about 30% in the first quarter. But these are still compared to a year ago. They're still significantly higher. They're almost double. So quarter on quarter decline, but year on year, I mean, it's a big jump. Order book though is kind of flattish. So let's just address those, especially the profitability point, Mr. Rustagi. The decline that we saw on a quarter on quarter basis. What was it on account of, and could you guide the market for the full year EBITDA margins? Mr. Rustagi, you'll have to unmute yourself, sir.
Hi, can you hear me?
Yes, please go on.
Hi. So I'll start with the order book. I think our order book has still grown over the last quarter. What has happened during this quarter is that there was a lot of volatility in the international prices, particularly in relation to some of the raw materials. So as a result of that, both the customers as well as we as a company, we felt that it was a better time. It was a time to kind of let the market settle down a little bit and then move towards order execution. So as it happens, since the end of the quarter, we've already signed some large orders, and our order book is actually very healthy. So I won't read too much into the quarter ending number as a result of that. In terms of margins, so again, our core profit margin remains intact. Our profit numbers are actually at all-time high. What you see in terms of the slight depression in the EBITDA margin, that's merely an accounting entry. Because, as I said, the international raw material prices were volatile, as a result of which, as a conservative policy, we have taken a markdown on one of our raw material inventory. And that has pushed up the cost of goods sold, causing the slight dip in profits. But as we go forward, as those raw materials get converted into finished goods, we will see those accounting entries being written off and the profits come back to normal levels.
Mr. Rustagi, could you give us an end of the year number for both? Where would order book be at?
So,
and where would margins be at?
So, what I would say is that the Indian solar market is growing exceptionally well. We had a best ever quarter, Q1FY26, in terms of capacity addition, 11 gigawatts, which is more than double of what we did last year.
Mr. Rustagi, numbers would help, sir. It just focuses the mind.
Yeah, so, unfortunately, I can't give you any guidance in terms of numbers for us as a company policy, but we have a very healthy order book. As well as a discussion pipeline with the customers for future orders.
Have we seen the peak? Let me put it another way. At 30% EBITDA margins, is that a bit of a ceiling? And we kind of, same time last year, the EBITDA margin was 16%. 16 is now 30.
Correct.
Right? So, what should we expect? Direction of travel?
So I think the direction of travel, as far as we can see, is pretty encouraging and near the current levels. We have an order book already signed in place for next year's production, which is nearly at the current margin. So I think we expect the visibility at these current levels to stay for some time.
Okay, all right. Hi, Mr. Rustagi. Good to see you, Ben. The cell capacity has been coming on stream. I think in this month, there was another capacity that came on stream for cells. Or it's due to be coming on in the coming months. Tell us, out of the total cell production, how much of it is consumed in-house and how much of it is sold to third parties?
Yeah, sure. So you're right. Our new cell line has come online. It is one of the most advanced cell lines in India right now. We consume part of the cells in-house and partly sell outside to other manufacturers. And that ratio, it tends to vary from quarter to quarter. But very broadly speaking, we try to maintain the ratio at about 50-50 levels.
Okay, all right. So 50-50 levels. And as you get backward integrated, then will that be an additional reason for margins to go up from here on? As Prashant just said, you were doing teens, you're gone to 30%. But as backward integration comes about, is there scope for further margin improvement, or you'll be satisfied at around this 30% ballpark?
So, I would say two things. One, we are integrating backwards. So a lot of the raw material that goes into solar module production, we will start making ourselves. So that will definitely help the margins go up. But the second equally important factor is that, we are moving the policy framework, moving towards more and more value addition in this space, which means customers are mandated to buy in India, and the share of Indian manufacturers as a result in the whole market is also expected to rise. So overall, because of these two factors, like I said, our margins should be very stable, and if anything, positive because of the backward integration.
Okay, all right. I just want to take that point forward itself, because you've mentioned in your con call as well, you want to focus on India. Exports has come down to 1%, and that's not a focus area. Previous quarter, I remember it was around 6%. Now, if you're saying that, Indian producers, Indian manufacturers will gain a greater chunk of the market share, what is it currently? If you could give us a rough number, and what is the opportunity then?
So, this year we expect the Indian market at about 40 gigawatts, out of which imports will account for about 15 gigawatts, and the rest would be the Indian manufacturers. So we are talking about 25 gigawatts out of 40, which is a market share of about 60%. In 2 years' time, this 40 gigawatt market size is expected to go up to about 55 gigawatts, with the entire share coming from India. So, which means the share of Indian manufacturing is going to actually, or the absolute volume is going to double in size over the next 2 years.
Vinay, finally, just very quickly, apparently cell prices in China have picked up in the last 2-3 quarters. Some reports suggest they're up 30%.
Correct.
Can you just tell us if that has any second order effect here on pricing in India? What is generally happening with cell pricing here, modules, and just how you see the next couple of months shape up on this?
Yeah, sure. So, what is happening in China very quickly is that the Chinese companies have been selling below cost. They've been dumping their products because they have so much oversupply and overcapacity, which was not sustainable. So I think they've had a lot of pressure, and the prices have started going up finally. The good news for us is that the Indian market is pretty insulated from what is happening in China, partly because of the government of India policies, and also because of all the investments that we have made in our own capacities. So I think, we don't see, there is temporary, some minor adjustments that we have to make in terms of our purchases, timing of our orders, etc. But by and large, our pricing and our profitability remains intact and insulated from any movements in China.
But can you demand higher pricing for what you're selling outside, not the captive use, but outside? Do you see higher cell prices in India?
So yes, I mean, currently the cell prices in India are higher, but that is again, depends on what you're comparing it with. If you're comparing it with China, I would say that is not a true benchmark because the Chinese companies are selling below cost.
Yeah, absolutely. It's interesting, and maybe next time we'll press upon that. You said EBITDA margins should be, we should be able to hold on to it for some time. So that for some time is the question. Thank you very much, Mr. Rustagi. Appreciate you joining us, and good speaking with you here on CNBC TV18. Good luck.